Good morning, traders. So how do we trade the Dow Jones today? So yesterday's plan actually worked out almost to a treat. It was the pullback was a little bit deeper than I was expecting, but it definitely did work out. So I'll run through that now. So this was the level here, this 25 to 20 that I was looking for us to get some buyers step in from. We did overshoot that, basically down to the 20 moving average on the daily, and then the buyer stepped in and pushed price up. Okay, so let's just get right on to the levels that we can trade today. And you'll see the trend was down, as I said yesterday, and we were looking for, basically on the 4-hour, we were looking for buyers to step in somewhere in this consolidation zone. And to be honest with you, I was expecting it sort of in that area there. And we ultimately dropped all the way down to the bottom here. And you can see your level would have been on top of this swing high, this swing low. That's the level that you would have been watching. And then look further left and you would have seen that there was a breakout there. And that's what we tagged. Okay, so you can see how price tried to break through here, then we broke through, failed, and then broke through again, came back and tested this level here. So that is a fairly significant level, and you can see we tagged it again. Anyway, the critical factor on the 4-hour at the moment is that we are on the 20 moving average again. Okay, so we would obviously need to break above pretty much the high of yesterday for this to continue to the upside. And just bear in mind, have a look at the daily. We finished with a doji, and that is a very bullish doji bar that. Okay, so back to the 30 minutes. What am I expecting today? Well, clearly I am expecting more of the same, and I'm now looking for this thing to move to the upside. So just want to point out another factor here. And we're starting to get a little bit noisy, so give me 1 second. Okay, so this to me is our current range. Okay, you can look to the left here, you can see a lot of buyers stepped in. We've got buyers stepping in yesterday, push price up, and that is the top of the range. Okay, so I do suspect that we are going to see a bit of consolidation, maybe quite a bit of consolidation until non-farm payrolls this afternoon, and then a move to the upside. This invert head and shoulders, which pretty much failed, and you can see once it failed, the targets for these kind of breaks is the same to the top as at the bottom. So it's 189 points, and we basically tagged 180 points to the downside. Okay, so just bear that in mind, because basically what it is, it's a range. So it's a range breakout. That's what it boils down to. Even though it's a head and shoulders, it's a range at the end of the day. So if it breaks up, you get the head and shoulders target. If it breaks down, you still get, I'll use air quotes, head and shoulders, but it's basically a range break to the downside. Okay, let's just set up everything for today, and you can see how the breakout target and target number 2 was tagged on the move to the downside, and then immediately you could see where the buyers were stepping in, and it was getting a bit volatile. And correction sequences always take a couple of hours, and that's exactly what happened here. And if we just move across to this level here, okay. So a couple of things here. So we could still see a move to the downside, okay, and we could come and see the 1 hour 200 or the 1 hour 20 moving average, or even this breakout to the downside of the closing range. Okay, so this would be that would work out. So this would be around 25,250. So we could see a pullback to 25,250. I reckon that the 200 moving average on the hour will hold us up. So 25,288, 25,290 So basically this breakout level here. I have a feeling we're going to come and test this, hover around here, and maybe even consolidate in this area. So let me just get this out. So maybe even just consolidate here until non-farm payrolls. Okay, and then depending on what happens in non-farm payrolls, if we have some good data out, we're going to rally. If we have some bad data out, we're going to fall. And then the knee-jerk reaction will be over, and then the trend of the market will continue. Okay, so that's kind of my take on it today. Again, it's a 12-minute chart, and you can see how the 12-minute chart yesterday was your absolute friend. You can see how you would have stayed in the trend with the short pretty much all the way down until we start getting this consolidation sequence here, and then you can see all the barbed wire, bit of confusion at a major level. Okay, and then at the open you can see how the retail traders were taken out, because basically all the retail traders would have been trading with the trend and looking at this as it moves to the downside. Okay, and then you can see how we broke up above the alligator, came back to test the break over here, and then this was your signal for the long, and it's long with a stop below this fractional level here, okay, of 25,150, and you could still be long, you still be holding the long, or alternatively just taking the profit at the top here. And you'll notice that the top was, it was one of the 200 moving average, I think the 30, yeah. So you can see how the 30-minute 200 moving average, how we hit that with an exhaustion bar. And this also shows you how you can spot the exhaustion bar. See how the candles are pretty much big, then they're getting smaller, and then smaller, and then all of a sudden we get a big candle. So that is an exhaustion pattern. So when you see that kind of stuff, then you know that that is the top level, and then you're going to see either consolidation or retracement. Again, you can see big candle, big candle, big candle, small candle, and then all of a sudden another big candle. So that's an exhaustion bar. Okay, so that's my take on today. And I may actually look at a long at the European Open from this area here, provided I can keep my stop below this 25,300 level. That's a 26-point stop loss, and I'll look for, it's a good 127 points available, so I'm looking for this inside tail here. Anyway, guys, that's my take on this today. Watch out for non-farm payrolls. Me personally, I like to keep my positions closed and away from the market when non-farm is out, and then wait 15 minutes for the knee-jerk reactions to finish, and then start looking at the charts again for entries on a trade. Anyway, guys, stay safe, enjoy the day, and remember, last video for a couple of days, so I'm taking a break. Hopefully you guys get some downtime as well. Anyway, catch up with you guys later, and enjoy the day. Cheers.